Hey guys, welcome back to the channel. In today's episode, I wanna give my reaction to the last video that I saw of Dan Ives on Palantir, on Bitcoins, on Tesla, and how that will play a little bit much more into in 2025, and most of all with a Trump administration and with Elon Musk in the White House. I did some changes from last video. For all of you guys that follow me. Um, I bought it, I sold some crypto, LTCN and BCHG, and I bought more Misty, I bought more Connie, I shop it around. This give me a slightly low value of my portfolio, but definitely I went up $5,000 in distribution monthly. So right now I'm 660,000 projection. This means that this number is calculated for what I did the last month. So if something change and Misty will be actually the release Misty from Yield Max. Um, we release the distribution of the dividend for this month actually today, and I will make another video give my opinion on and how much is my portfolio worth at that point. But again, I bought some more stock, so I still grow. This is the crazy part of my portfolio today. I mean, actually, yesterday I made for almost $50,000 in gain with a total amount of $335,000. This will give me again. This is unrealized gain, so it means that if I don't sell it, I will never get this amount of money. And in the middle time, it can go up, it can go down, and this number will change. But what I'm really concentrated is part of the portfolio. It's how much I can get every month. Why? Because I'm a high yield dividend investor. Means that I'm retiring just collecting dividend from the stock that I own. Of course, I have also growth. Of course, I have also growth dividend. Sorry, I have also growth stocks, that is Tesla, Nvidia, and now I have a Palantir. Palantir just opening my position for $14,000. I'm working on Tesla, Nvidia for a long time. $500,000 in Tesla and a $250,000 in Nvidia. But let us see a little bit the video of Dan Ives, and he was interviewed recently on Schwab Network. Let's see what he has to say.
The early parts of it starting to form over
Yeah.
the next like 5, 7. I also think like you're gonna have things like space travel, obviously so expensive.
Let's see if I can put it a little bit much more at the beginning.
Where for you?
I'm touched. Seriously, that is like that. And but look, I can't even pull off a pocket square. So like,
That's all I got.
but you can.
Well, we appreciate the time. We've got a lot of good stuff to talk about. You got a new role too. So global. I mean, you're moving around the world too right now. So how does it change the way you view things, or any additional scope for how we should think about your coverage?
Yeah, I think it's more scope. I mean, in terms of coverage, I mean, it expands a little, but I think the big thing is just having more coverage, especially when it comes to Asia, China, and some of the other parts of the world. Along with our team here at Wedbush.
Do those markets stand any chance next to the U.S. big tech, Dan? How much real kind of potential variance arises between the U.S. leadership versus the rest of the world in the new administration?
Yeah, no, it's good. Look, I mean, U.S. I think strong gets stronger, so I actually think that's something that's even just more of an accelerant. But I do think those markets, it's enabled us to maybe get an edge when it comes to supply chain and just broader some of the demand that's going on within tech. When you think about what's happening across Asia, across Vietnam, Malaysia, and others. But look, I think under Trump, I mean, this is a Cinderella story for big tech. Regulation essentially gets defanged, more deal making. Musk with a big C at the table. It's very, very bullish for big tech.
How much of it is new narrative? How much of it is just kind of a cherry on top if we stretch the timeline back? Basically, it seems like for a proper big tech conversation, we got to go back to basically COVID, it seems like. kind of the fertile soil that began a lot of this latest thematic movement. Take me through that, Dan, because it feels like if we rewind the clock a little bit, we get some answers as to when this started. Just when we were dumping money and cutting rates, basically, right?
Well, no, I mean, like, and look, me and you talked, throughout many of the years, and I think it was the start of essentially a new foundation. When you think about what happened in tech, then you could say some of them, like Zoom and some of the sort of COVID names that obviously started to come down, once
Yeah, the one trick
lockdowns and
ponies.
everything came out. But from a shift to the cloud, hyperscale, foundational, I mean, that's really the start of what I view as almost a 10-year cycle. And I think we're only kind of 3, 4 years into it. And then I think what changed everything was the combination of what we've seen from Godfather of AI, Jensen, NVIDIA, GPUs going back 2022, what we saw from OpenAI, and of course, Microsoft. And that combined is essentially creating a fourth industrial revolution when you think about AI.
How much do you think about COVID as a catalyst in the way it forced businesses to adopt technology? At the time in my newsletter, I wrote it as a time machine. That COVID basically sort of opened a portal, if you will, to this future demand that was going to get there eventually, but kind of fast forward it to your point about some of the one-off things that fizzled, but then it also did really usher us into this new age, it seems like.
Oh, no doubt. I mean, I think that nails it in terms of what it ultimately did, because it accelerated the shift to the cloud. I mean, like when you start COVID, let's call it March 2020, you had about 30% of workloads in the cloud. Today, we're about almost 50% and going to 75%. So it just shows what ultimately happened there, Oliver, is that we're talking about the beginning of what was ultimately now trillions of CapEx dollars toward tech. That's why big tech continues to get bigger, Mag 7, everything else. And that's not stopping, especially with regulatory essentially defanged, under the Trump administration. Khan will be out at the FTC and others. So this is going to be a really golden age for big tech.
I do want to talk about how things are changing on the margin, and at the risk of zooming out too far, but kind of
So, guys, golden age for the big tech. This means that uh, we need to go inside. We need to start to invest in this big tech, Meta, Google, Amazon. Guys, I know that they're expensive stock, but again, in the method that I use, I extrapolate dividend from the ETF and invest in this big tech and invest in other big stock or other tech stock. Again, for me, the big three that I use in my portfolio, like you guys know, is Palantir, it's Nvidia, it's Tesla, and all of three I have a big stake of money. I have a big investment, $500, more than $500, $500,000 in Tesla, uh, more than $200,000 in Nvidia, and I just started this position in Palantir, 14,000. But guys, this morning I shift around. I sold, like I was saying, some crypto, and I'm going much more, a tangible asset, still a paper asset, but still, from crypto to Tesla. Tesla actually as a product. Again, guys, I invite you to, check all my old video in regard of Tesla and Nvidia. I start to invest like few $100, few $1,000, and now my portfolio is growth because Tesla, because Elon Musk in the White House, just like Dan was saying, it's a renaissance of the tech company. And again, guys, this is not even start. Like Dennis was saying, we are the first like 3 4 minutes in a long party that is going through overnight. And guys, this is how I see this bullish moment of Tesla and Nvidia. Again, these are all the tech company, guys. And to not repeat myself, but with Elon Musk in the White House, I mean, in the regulation that are going away, many of these regulation that will get killed. Imagine like what what the stock market will go. I'm a really bullish in Tesla, Nvidia. and Palantir, of course, but there is more. There is Meta. There is like Microsoft. There is like Apple. With the intelligence. Again, guys, the sky is the limit. And for me, you know my preference, and of course, how I invest in this. I mean, how I buy like $300 of Tesla share. Again, guys, Misty will come. We will receive a dividend from Misty, and I have almost like 300K. In Misty, we have 6,640, 6,616 share. My biggest holding right now is Connie from 9,216. I'm thinking that I'm buying until 10,000 of this. This will be my first 10,000 share of any stock that I own. And I'm continuing to invest, as you guys see, in Connie. I want to try to lower my average cost. As you can see, guys, my average cost is $19, and right now it's 16, and I'm losing $22,000 on this investment. But Connie, guys, pay me 5, 6, 2,000, 3,000, 4,000. I mean, I made at least 50, $60,000 in income. Actually, let's see if I can show you. Let's see if I can get one of my accounts, and this will be on Robinhood. This easy to access. Let's see if I can get. Let me show you if I can show you how much I made in Coney. And again, this is one of the account. I have many more, but at least I can give you an idea of what is the income of this Coney. It's been like uh, crazy good for us. Let's see, history, show more history. Let's go on dividend. So I can show you and dividend search. So guys, this is my dividend list. Like I was saying, guys, I lost $22,000, right? So a regular person will say, "Hey, oh my gosh, you actually lose money in your investment." Yeah, but wait a second, not so fast. I made in my last November 15 $10,000. The month before 3,900. The month before 2,000. So just this is 15, right? The month before 2,000, 2,000, almost 2,000, 2,000, 16,000, 6,000. Let's see if I can actually, I don't know if I can calculate. Let's see. Let's see if we can let me this. Let me see if I can calculate how much it is. So I can get you an idea. Of course, guys, this is a big portfolio. Let's see if we can give me the total. So, like I was saying, 10,000. Yeah, actually, right. And this is, I just ask ChatGPT if you can give me the total, and the total, guys, is $56,000. So I lost, yeah, I lost too. I lost what, like 22,000, but I made 56,000. So I mean, it's a great investment, no, right? And for all of you guys, I continue to say about this NAV erosion. I mean, yeah, there is an average, it's true, but I bought my stock at 19. If I continue to lower my average costs, this would be a positive. Again, I still positive because I made almost like 35,000, and it's a monthly. Guys, they never stop because I will not sell it. You know what I mean? This will never go to zero. Zero means that the stock will be like a big, catastrophe in the market. If this go at zero, we have much more problem that how much I make a month. But again, just like I think one of my best investment. Again, this is subjective, of course. But let's continue to then let's see what you have to say about Palantir, Tesla, and Bitcoins.
The one other point there, Dan, on the origins of this is how much do you think kind of the just whole system was proven out the way we lowered rates, we put money into capital markets? For anyone who kind of doubts that prosperity stems from innovation, can we attribute some of this to the money that was injected into the economy to get these ideas flowing, right? Isn't that like how tech revolutions happen?
Of course, that's how revolutions happen. I mean, it goes back no different than you could go back to when I covered textile financial crisis and TARP and everything else. That created the next level of innovation from 2010 to probably 2016, 2017. That's how the system works. It's how it should work. And I think when you look at essentially, Fed engineering, a Pillsbury Doughboy soft landing, and that's why a lot of times the bears, they sound smart with their spreadsheets and valuations, but they've missed every transformational tech name the last 15 years.
Okay, so then where we're at right now, do we need any additional economic stimuli, or are the wheels and the gears kind of turning themselves now that we've had the AI and the breakthrough from NVIDIA, particularly on powering all this stuff? How much is kind of self-moving now, Dan?
I think 50% self-moving, 50% you still need. And that's why like lowering of taxes, deregulation, essentially when it comes to FTC, GON, others. I think when it comes to where money is being spent, Inflation Reduction Act, that's going to be massively shifted. I think Musk is going to play a huge role there. It's not necessarily kind of like the red tape poster child, like an Intel. It's going to be much more focused on the AI. I think a hyperscaler is going to benefit, the likes of Amazon, Microsoft, Google, Palantir, and others. Look, I think the reality is that we are on the cusp of really an unprecedented revolution. But that's why when you combine that with Trump getting in a red sweep, it's a Cinderella story for big tech. And I think that's why we've even seen that significant rally since Trump got in.
Dan, how would you score the current AI product offerings? We obviously know there's all this $1 trillion CapEx happening in terms of consumer product, and I guess business product too would be a fine answer. But when I think about like the existing consumer stuff, Google Gemini on Google phones, Apple Intelligence coming, Microsoft Copilot, obviously the Chat GPT functions and such that some are now generating revenue. How would you score the quality of our AI output so far in terms of product?
I think it's jaw-dropping. I mean, I see more from the likes of Palantir.
Sure.
We see from Oracle, Microsoft.
Commercial.
I think enterprise.
Now,
enterprise is where consumer, get the popcorn out. I mean, the point is like this has just started. The consumer revolution will ultimately go through Apple, iPhone 16, iPhone 17, everything that we're seeing with Apple Intelligence. But that's why it's not just about Mag 7. This is the second, third, fourth derivatives about to play out across software, across cybersecurity, across infrastructure, across consumer tech. And I think that's where now it's setting up for, over the coming years.
The hardware versus software trade-off has been so stark, but it seems like now that has shifted a little bit, to your point, in the last couple months. Salesforce breaking out to highs, the cloud complex coming back, a group that had been lagging significantly compared to all the big hardware build-out. Is that going to be as broad of an AI lift, or will we see, again, winners and disruptors in the space? How specific do you think that gets, like business to business?
I think 2025, software is going to be the trade. Because the second, third derivatives of everything playing out, Salesforce, ServiceNow, Oracle, Workday, and other, Adobe, now the use case starts to play out. That's why Palantir is clearly the message of AI, which has been an early sort of leader there. So I think now as it goes from kind of the CapEx build out, now we start to see use cases, and that's going to benefit software. The other thing is deal making is going to accelerate with done. So that's going to be also bullish for software, SaaS, and a lot of these names that maybe have underperformed.
That one's a big one. I mean, if there was one real economic or policy hallmark of this administration, it's probably the FTC and the antitrust stuff. So, I mean, that's got to be a huge one removed already for at least a premium applied to some of these stocks, if, you know, to your point, Con is removed.
Oh, I mean, I think there's a better chance of me playing in the NFL than her not not being removed at the FTC. And I think ultimately, look, that's what big tech needs to see. You can't have this spider web of regulatory as we're going through a fourth industrial revolution. Trump comes in, red sweep. Now you see all those agencies essentially defanged, from crypto, to obviously FTC and others. And that, look, if you're a tech bull, that's drinking rosé, lobster roll.
One of the areas, as you mentioned it, as a brief aside, before I come back to some of the big overarching stuff, is in your coverage, there's not a lot of like blockchain, crypto-related stuff, and generally you haven't spoken too much on that compared to the equities. I know part of that is just your background in equities, but what is your feeling on that? As I mentioned, obviously, a stalwart of bullish themes in general.
Sure, yeah, and obviously, like, and Tom Lee and others have talked about from a Bitcoin perspective. Sure. I think now regulatory that gets thrown out, you have to be bullish on Bitcoin and overall crypto, because I think the other thing that's going to happen over the next 3, 6, 9 months, I think a big thing that you're going to see more and more companies that maybe were not going to invest in Bitcoin or crypto now will. You're going to see more and more of their cash going toward that, given the regulatory framework has dramatically changed. So I think that's something that just speaks to just a broader view of where we're heading. That's good for crypto. It's good for big tech. And I think we're in our opinion, going into what's probably going to be a bull market that lasts through the end of 2026.
Dan, what do you see as having greater technical prowess or productivity prowess, the blockchain or the AI stuff? How do you compare those two?
Look, I think blockchain is still more of a derivative of cloud, and as we see in software, and then that's all going to play out, and that's probably going to be maybe like a slower build out, but still very strong from a blockchain perspective. AI is going to be it's parabolic. Like if you looked at an AI versus a blockchain, I mean, AI is meteoric.
Yeah.
Because of the CapEx. Because remember, you had 500 billion of CapEx just related to tech. That's not even related to sovereigns, other companies, and everyone else starting to play. And you could say together that could be $1.5 trillion, $2 trillion of CapEx just for AI.
Yeah. And then again, I don't want to get too far outside your coverage, because I know you don't cover like the fintech stuff, at least some, the crypto heavy ones. But it just kind of seems like when we've gone through this investment cycle in the last, we had sort of this blockchain investment cycle. When you think about allocators like these big tech companies, I imagine it's going to skew super hard to AI. Or is there a feedback mechanism of crypto price that just, brings interest? Or are all these big tech companies just full on AI?
I think full on AI, but crypto, I mean, I'm not necessarily as seller, as dramatic as that, but you will start to see crypto start to become, more in the vocabulary, especially as the regulatory environment has so dramatically changed. And these companies, look, you have over $1 trillion of cash from big tech, in terms of where that all sits.
Thinking about the big hyperscalers that have led us, Dan, what do they need to show here over the next couple months? How their investments are paying off? Can they get a free? Because I think about Microsoft last quarter, it looked like it stopped kind of getting a free pass a little bit by the market on the CapEx stuff. But then obviously you've got others that are closer to highs. But then you've got like a kind of spread opening up a little bit where Alphabet, Microsoft seems like the market now maybe needs some fresh justification.
Well, I think the difference is that it's not just about Microsoft. Look at, we've talked about Google, some of the parts. The Google Clouds, I think, now accelerating. That's a huge part of the Alphabet story. At AWS as well. But it's not a zero-sum game. If you look at Microsoft, Azure growth is, I believe, it troughs out and then actually accelerates to probably mid 30%. So as this all plays out, this is just the start of the hyperscalers, showing the growth that I think actually most of that is ahead of us, not behind us. I just think on Microsoft, investors, maybe the stock got a little tired, we'll call it like that, a little hyper focused, a lot of downgrades. But Microsoft, we're only halfway through this cycle in Redmond.
What type of valuations do you think are possible here, Dan? I mean, Microsoft and Apple both trading above 30 times forward for very profitable businesses. That is an expensive valuation. Granted, the quality of these stocks is has always been there. Valuation-wise, we're up there, like at the highest of highs.
Sure, and I think Ives continue to say the bears, when they're in their caves in hibernation mode, they can't find in their spreadsheets AI. And I think the difference is that you have to sum of the parts these names in terms of ultimately what will Microsoft look like as AI scales over the next 2, 3, 4 years. What does Oracle look like? What is the Google piece from the sum of the parts? I'd argue the same for Apple in terms of what that AI piece is. That's been my argument with Tesla as well. You have to factor the AI and look out next 3, 5 years, what the valuation is there. And look, my whole thing is just covering tech 25 years. So many investors that I've talked to have missed every transformational trend, every transformational big tech name because they're laser focused in the 10th floor of the New York City office building in their spreadsheets. Part of, for me, 3 million air miles, 20 years later, by seeing the world, you have a different perspective where a lot of investors, they don't see that. They can't find AI in those spreadsheets.
I guess it's like trying to find a god. Tell me, Dan, what you're like, that meme where it says, if something would have changed, this is what society could be like. And it's like a vision of like this future, metropolis, this incredible society. What's the Dan Ives vision? What does it look like?
So I think called 5, 7 years. So let's just call it toward the end of the decade. I think 10 to 15% of ride shares are autonomous. I think you're going to have flying taxis. So in other words, I think we'll start to see some of that demo, Joby and others, 2028 LA Olympics. But I think transportation is going to massively change. I think you're going to have, think about Vision Pro today, but almost as sunglasses, similar as Meta. So I think you're going to see people will be walking around with almost sunglasses where their phones they'll be able to actually see as they're actually walking. So I'm just trying to give you like some. I also think robotics. I think many households are going to have robots that are AI-driven robots in their house. Now, if you think about Optimus and others, I think that's just a sneak peek to where I see it, where you're at work right now and your robot is home, walking the dog, doing the wash.
I like it. So it's pretty much Jetsons, right? Like that's our baseline. We need to go through there and just invest.
No. I don't think we're way off. Like if you talk about Jetsons, from a Jetsons type, at least the early parts of it, starting to form over the next 5, 7. I also think you're going to have things like space travel, obviously so expensive today. I think as you look out in the next 5, 10 years, that's going to be something that will actually start to be affordable, where you could go to space for a day or two and it's not going to be just for the uber wealthy.
Dana, is there a way to, when you talk about the global side of, before we bring it back home, I think the two most important stocks you cover, from the global side, is there an underappreciated way to play this, or how much does that depend on the policy stuff we started talking about at the beginning?
I think it's policy stuff. I mean, to me, I'm still more a believer. I stick with my winners, the names that we do all the work on. Those continue to be the ways to play it. I do think that from a policy perspective, the China tariff, that will clearly, be a sort of noisy issue. But I think when it's all said and done, Musk is going to have a huge seat at that table. And there's probably likely going to be carve-outs for Tesla, Apple, and probably a lot of the supply chain plays like NVIDIA.
Okay, so Tesla, look, no question, foot in the door at the White House. I mean, more than a foot, obviously, is a big
An
deal.
office at the White House. Yeah.
Exactly, right? Yeah, actual role is worth premium in a stock, it seems, without question, especially for a stock whose premium was eroded based on persona and character. So first take the victory lap, I guess, real quick on defending Musk's multitasking skills.
Yeah, look, this was a bet for the ages for Musk. I mean, Musk betting on Trump is going to change the whole landscape for Tesla. Autonomous, AI, regulatory. I think a lot of that gets massively accelerated. EV tax credits get pulled probably in January. That's negative for the industry, negative for Detroit. Remember, Musk, when it came to Biden administration, even Obama on the outside looking in, right? Now, Trump administration, huge seat at the table. Going to be very important when it comes to China tariffs. Those discussions, almost an AI ambassador. Look, I believe AI alone, the autonomous piece, is worth $1 trillion alone to Tesla stock.
Mm-hmm. To my mind, it's not. It's something that feels like an inevitability. The self-driving cars. So like, and I don't dispute that at all. Or your market cap assessment. That's you. One thing I'm thinking about now, Dan, though, is there any worry in your mind that it gets sketchy at all if Elon starts self-dealing in a way from the White House? Like, I mean, I guess he's got the mandate right now, which is fine, but does any of that backfire, open him up at all? If he starts giving himself or removing credits, et cetera, or is the market not just thinking that anybody's going to check them on that stuff?
Look, I think it's a new world, right? And I think, the rules that I think Musk goes to a different set of rules. And I think as it all plays out, as we're seeing, it could have some bumps in the road, but I don't see how this is all going to change. In other words, I think autonomous is going to get significantly fast-tracked. The AI piece is going to get fast-tracked. And that's bullet. Look, the poster child who's going to benefit here is going to be Musk and Tesla.
What about the angle from Tesla with the credits? One thing I've heard is that if they remove credits, then the lesser peers struggle more. And that one seems like there's a few leaps of logic there.
Well, removing the credits is negative for the EV industry, negative for Detroit, right. 313 area code, bullish for Tesla because they have the scale and scope that's unmatched. They make profits on a $35,000 car, $10,000. You look at the tax credits were essentially given an even playing field to give affordable cars to some of these new entrants. That's out.
Yeah,
that's bullish for Tesla.
Okay, so you're saying basically like a Rivian, I don't know the names, or like some of the companies that are losing a ton on their vehicles basically will have to like cease operations.
But also Rivian's a high-end consumer. They're not focused on tax credits. Like you're talking about vehicles in the $35,000, $40,000 range. Mm-hmm. Look at GM Ford. GM has 10, 12 vehicles come out. You take the credit out, it's a game changer. And guess what? Musk is almost like wasn't invited to the party for 8 years. That being the White House party. It's all about Detroit, Barra, GM,
totally.
Biden, UAW. Now all of a sudden they come to his house and he's sitting there in Mar-a-Lago. It's not a good situation for GM.
But GM and Ford, they can still afford it. I don't know about Ford, but GM seems like in a good position to generally still be able to produce the cars. They'll just do them at a lesser margin, though, so it's not like the cars come off the market. By the way, one of your best calls has been bullish on GM.
And we're bullish on GM. And look, I could argue investors almost want to see that. They want to see GM be like, hey, why don't you tone down a little the EV sort of transformation, go toward hybrid. So the irony is that this almost gives GM a excuse to almost maybe tone it down, which is bullish for the stock.
All right, fair enough. Hey, Dan, let's talk Palantir. I think this one's arguably the most interesting of all of them. Kind of a stock that was early on shrouded in mystery, apart from those sort of in the know. And it feels like Wall Street is distinctly still out of the know because the rating coverage on this is, I've never really seen anything like it. Not only just the bearishness and the neutrality, which generally is not the way Wall Street analysts work. They're generally more positive than neutral or negative. But the fact that the stock has been making highs, breaking out, trending higher for months, it's like some of these people don't have charts. What's going on? And by the way, I think this is your biggest outperformance, even more so than Tesla, according to how long you've been bullish in your price targets.
Look, the analysts, if you don't spoon feed them, and they don't put, Carp is not someone, and the Palantir story, they're focused on their vision. The analysts, I think institutions have gotten this so wrong. Like, I would actually say in 25 years, I've seen many names that were kind of mischaracterized, right? Maybe the street got wrong. I think this is probably, I've never seen a name more misunderstood by the street, and probably, one of the biggest misses than the Messi of AI, Palantir. Because look, I just think many viewed it as government, three-letter agency, it's CARP. The reality is that it's some of the most innovative technology in the world in terms of what Palantir had done. It was just a matter of them starting to take that from government, focus toward enterprise. And now when you look what they've done, they've become the artery for enterprise AI. And I think this is another one where retail, just like Tesla, was way ahead of institutional when it came to Palantir. And that's how the stock went from a junior high school individual to a senior citizen as a stock.
But it's we're not putting it out to pasture.
This has just begun.
Yeah.
We are in, it's 10 p.m. in the AI party that goes to 4 a.m. And right in the middle of that dance floor is Carp and Palantir.
All right. It's like that meme again of, everybody dancing and the Palantir analysts in the corner. Nobody knows my cash flow analysis, but actually.
Again, because they're sitting there and they're like, hi, where's the AI? Can't find it on my spreadsheet. It's the problem.
The stock has been doing it on huge revenue growth. Valuations obviously sky high. Do they need to deliver any more to the bottom line than they already are? Because the free cash flow is picking up.
Free cash flow is the key, because now you're going to look billion in free cash. When does that be? 3-4 billion. Palantir is one you have to look at in the next 4 or 5 years. I mean, Albert, this is a new story being built when it comes to AIP and it comes to the Palantir enterprise piece that's not being factored into the stock. Now it's started to get factored in, but I could argue, like, when you look at $500 million, in terms of where we've kind of gone, you ultimately look at the trajectory here. I mean, we could start to be looking at $4 billion, $400 billion, $500 billion. Could this be $1 trillion valuation? If they continue to execute, that's not out of the realm.
Right, good stuff. Love the vision of the future. Dan, thanks for your time. Fun stuff. Glad we got through a lot, and like to back it up to figure out the sources of this big theme. And congrats on being right and ahead of the vast majority too.
No, thanks for being here, and you do such a great job. It's so awesome to be here with you.
Thanks.